Right on. I hear you, man.
Hopefully.
Welcome back to another episode of FinTech Fridays. The last episode of 2023 for probably most of our watchers and listeners. It's good riddance to 2023. So I am pumped, though, to have Jeff Walton join me. Jeff, welcome to our little podcast.
Great to be here, Brian, as always.
So Jeff is the CEO of InGenius. If you're following me on LinkedIn, which I'll apologize in advance for all the obnoxious posts I do, but Jeff was kind enough to share some data with me that I posted a few weeks back on the loan officer count as we exit 2023. But I've seen your company and your data represented and referenced in probably dozens of posts here in the last 6 months. So congratulations on that. Let's start by sharing.
That's all we got, Brian, and we got Dan. That's all you're going to see from us. That's all we got.
I love it. Well, let's share with the audience a little bit about InGenius. I think a lot of folks know who you are from your illustrious career in mortgage banking. Probably fewer understand what InGenius is, who you guys are, and what you're doing in the role you serve in our industry. So why don't you share that with us a little bit?
Yeah, sure. So InGenius is a data analytics platform or data as a service. And we, in particular, provide data for recruiting mortgage loan officers and prospecting for realtors, along with the ability for loan officers to prospect for realtors that they want to get business from as a referral source. And then also for our diverse markets group that allows institutions to see where they stand in different census tracts that are tracked by the regulators, and also to be able to recruit loan officers and prospect for realtors within those MMCTs and LMI census tracts.
So MMCT, I'm a former banker. So majority minority census tract, correct?
That's correct. Absolutely correct. And that's what the regulators look at in order to determine, are you lending in those areas, or are you redlining? And redlining has been an emphasis of the Justice Department, therefore the CFPB, since June of 21, I believe, is when they started that initiative. And that pertains to not just depositories, but it also pertains to independent mortgage bankers. And there's been a number of those enforcements, and something that continues to be on the radar.
Yeah, so I think that's a good place to start, because I think for a long time we've all thought of CRA lending, CRA initiatives as only important for banks, right? And Community Reinvestment Act is CRA, and typically banks are measured on how they're doing lending in either majority minority census tracts, as we discussed, or specifically to minority consumers and or other underserved segments, both from a ethnicity perspective, but also from an income perspective, right?
Right.
And now, as you mentioned, we've seen this kind of bleed into the non-depository space, where lenders are being scrutinized, in some cases penalized, for their lack of lending to underserved communities. And you guys have a platform that allows all institutions to really understand not only where they stand, but more importantly, where they should be focusing to make sure that they're originating in a diverse manner. Is that a good way to describe that?
Yeah, no, it's an excellent way to describe it. And then there's also some state recognition of CRA in states of Massachusetts and Illinois, and pending legislation in New York and California. And there's also changes to CRA and fair lending for everyone. When it comes to January of 2026, you're going to find that you're not held accountable for your Community Reinvestment Act just where you have branches, but it's also where you lend. And that's keeping up with the times of online banks, right, that don't have branches. Then also they're going to be looking at small business lending for depositories as part of the HMDA-like reporting is going to have to be done and reported starting in January of 2026. So the gathering and recognition of it starts ahead of time. Reporting starts then.
So from a business perspective, so I get all the regulatory reasons why understanding, measuring, and monitoring is important. I also understand that and believe, and I think you as well, that there is a pretty significant business opportunity. Even if you're not a bank and you're not measured by CRA, there's an opportunity for you to source business, originate business, and then banks are looking for those loans to invest or acquire in order to meet their goals. So this is, this segment of origination is, for the most part, I think still untouched or undertouched from a business strategy perspective by depositories, but it is a very viable line of business and can be profitable from a secondary perspective.
Yeah, there's no question that these loans in these markets are worth more on the secondary market than non-MMCT and LMI census tract loans. And it does make good business sense. And also because the Hispanic population is growing tremendously. Right. This is the future. And you should be lending for diverse reasons other than for regulatory reasons alone.
Yeah.
For so many reasons, but there are economic reasons for sure.
Absolutely. Yeah. In my past life, I was on the buy side of looking for, these target rich loans from originators of all sizes. And I can recall premiums pushing, depending on, this time of the year, Jeff, could be pushing 106, 106 and a half, maybe 107, depending on a particular financial institution's need to hit their numbers by year end.
Yeah, no question. That's absolutely correct.
Well, let's dive a layer deeper. And I think it's important for folks to understand the level of information and data that InGenius is sitting on top of, right? So you referenced two particular data points that I want to drill into. One is who the loan officers are, right? So from a recruiting perspective, let's start there with with what you see down to a single loan officer in your data set, and how that can help a company or a recruiter identify the right loan officers to have conversations with.
Yeah, and I think that's really the point. When you go into a marketplace and you're looking to recruit in an individual marketplace, you want to fit the strengths of that originator to the strengths of the company. So you want to go in, and we have dynamic filters that allow you to do that, right? So you can go in and say, okay, I want people to do between this volume and this volume. I want people to do a certain percentage of purchase, but it might be like 90%. But coming up this year, it's going to become a factor again, hopefully. Yep. And I want somebody that does a certain percentage of FHA or VA because I want them to be more profitable. I want somebody, we have a builder product. I got interest in builder. I want bank-only reps, or I want independent mortgage bank reps, or credit union reps, or a combination thereof of the three. And I want to go back in time. We go back as far as January of 19, but let's say it's the last year and a half. You can go back and do that. And you apply all those filters, and then it matches those strengths of those individuals to the strengths of the company, which allows you to more easily recruit those individuals, and also, and maybe more important, retain those individuals because they're going to stick with you because your strengths match. That's extremely important, to call those people out and come up with a large list. And then you can come down and look at them and say, what percentage of conventional, conforming, jumbo, FHA, VA, low to moderate income, refinance, purchase, all those different metrics are given within the system. And the other thing that's very important is we have all the contact information for all of those loan officers and also those realtors that you want to prospect for. And then we let you integrate that into your CRM which allows you to action off of those analytics and market at scale.
Right.
But because you've got such detailed information on them, you can also make it a very personal message to those individuals that you're trying to recruit.
So if I can peel the onion a little bit, just so I understand, you're sitting on top of direct source NMLS data as a starting point, right?
Mhm.
And then on top of that data, you have your platform appends enriches the data set with contact information, email, phone, possibly address, things of that sort, right? And so you bring that all together, and then I love the comment around integrating with CRM so that you can scale your communications, but yet personalize the message to that individual based on that unique data set. That's a pretty powerful combination there.
The dynamic filtering. What's also important, obviously, is the accuracy of the data. So we have 18 different sources of data. We don't just have one source of D data, which is the primary source of a lot of this information. We have three different sources of D data, three different sources of MLS data, NMLS, HMDA, and also census data, and then other regional data sources that improve our data. The magic there is we have a patent pending process that allows us to blend and sequence that data, bounce it off each other so that you can make it extremely accurate and extremely granular. Which, if you don't have accurate data, there's so much wrong with that in terms of making offers, making sure you get the right match for your company, making sure that when you're talking to that recruit, that you're able to tell them that you have the data and what the data is. If the data is wrong, not that I've run into any loan officers that have any egos, or any of us for that matter.
Yeah.
You got my data wrong. What are you doing? Who are you?
Yeah.
It's just not. It's just not how you want to represent your company.
Well, it feels like if you're leveraging the InGenius platform and then having conversations on top of that data set, could be a combination of digital and other type of conversations.
Sure.
The level of credibility that I believe that institution and that individual recruiter has based on that knowledge base is probably going to stand above most others that are in the space having these recruiting and attraction conversations, I'll call them.
There's no question, and we love the challenge of a live bake-off or comparing data against your LOS for individual producers or for your company. We thrive on those live conversations, and if we didn't have accurate data, those would be painful. And the comments have been made. The fact when somebody asked and they go, the fact that you sounded excited to do that and didn't flinch tells me that this is going to be a good experience. We don't always have that experience with our data providers.
Right. So I'm scrolling my phone because you and I had an exchange a few weeks ago that I referenced around. I had a question about the trailing 12-month period. I think it was December or November of 23 back to January of 2022. So that trailing 12-month period. And specifically, my question was around what are the tranches of active licensed loan officers look like based on, I think I had 3 or 4 volume requests, right?
I think it was back to January 2023 to November. So those 11 months, but it was how many loan officers in that time did six loans or more? How many did 12? How many did 18? How many did over 30?
Yes.
Right? So we published those tranches, and it was enlightening.
Very, very. I didn't know what to expect when I made the request, and I had a specific business case. I was working on a slide, kind of a addressable market slide, right? Total addressable market type slide, and I thought there would be more numbers in that total addressable market, and I was somewhat shocked at how it filtered down pretty quickly.
And we've shown that from the height of pandemic refinance times that the number of what we call relevant loan officers, those that are registered with the NMLS and have done a loan a month over the last 12 months, had decreased by 55%.
Yeah.
So there's been a pretty big washout. There's a long tail that do 1 or 2 loans in a year.
Yeah.
Amazing enough. They must be tough to employ, but in any event, yeah, it is amazing. And some of the numbers around, what the top 20% produce are also amazing. And we actually have all those in my posts that are on our website.
Yeah.
At ingenious-data.com. If you can look at those posts and find those numbers.
Yeah, I definitely encourage folks to follow you, Jeff, specifically on LinkedIn and your corporate company page. There's been some pretty cool data points that you all have shared out. Like I said earlier, I've seen other industry experts publish data and reference the data source as InGenius. So hats off to you and your team for becoming one of the premier data sources for some of us talking heads, I guess, out there that want to sound smart.
Yeah, no, it's been exciting, getting into that role, and there's so much more to do. So we're excited about it.
Well, let's go there a little bit. Let's scratch the surface. You and I are going to do this again after the first of the year. But what are some of the cool things the team's working on from a roadmap perspective that you might want to tease out?
Yeah, sure. The most recent one that we've actually put into production and actually used, just with one source so far, but we're going to start marketing on it, is we can rebuild your loan officer's database back to January of 19. So good news, you recruited a loan officer and they're coming over. That's fantastic. Bad news is that they want to take their database with them that's property of their company that they were with and stuff.
Yeah.
And everybody knows the dance, right? And so why do that? We can rebuild that database for you and provide you with the borrower, the address, the realtors, the title companies, the date, the purchase price, the loan amount, the refinance amount. And we're working now with another company to be able to map that against the interest rates at the time. So it may not be loan level correct exactly, but you're going to have a pretty good sense of it. And going into a lower rate market, you're going to be able to, see who's in the money, right? And even when somebody brings over their database, what format is it in? How clean is it? How accurate is it? There's a lot of what ifs when it comes to that, and you can actually build a solid database for all your recruits. And then it may not have been there for that long a time that had or have not had their database or partial. So there's a lot you can do with that can increase your ROI on hiring loan officers here in the future. Right?
I love that.
There's a couple $1 trillion that are going to be in the money in the next couple of years that'll be in play, and to be able to go after that on a more data-centric basis is probably a smart thing to do. And control that centrally, where you can then grab that, take it, and then you can, take those customers and integrate it into your CRM, and you can action off the analytics and market at scale once again. And your loan officer doesn't have to do anything. The phone starts ringing for them, right?
Love that.
And then they're taking apps and closing loans, right? It's just ultimately what we want them doing.
Yeah, I mean, if we are clearly if we hadn't entered it, we are squarely in this era of data. Data being king, right? And I think what you all bring to the table is actionable data. It's one thing to have data, but you have actionable data. I see it. We're FinLocker. We're a subscriber, and we appreciate the relationship and use the data for our business purposes, which is different than probably most of your partners. So we definitely see the value and understand the power of the data source.
Absolutely. Thank you.
Well, Jeff, this has been awesome, enlightening. I always love to learn from you, and this one did not disappoint. I wish you a wonderful end of year, and all the greatness that's about to happen in your life. And congratulations in advance.
Well, thank you. Thank you very much. Thanks, everybody.
We'll have you back on after the first of the year to kind of share the what's coming down the pipe with InGenius. So everybody, thanks for tuning in. Thanks for another great year of FinTech Fridays, and be sure to check back in 2024.
Thank you, everybody.